Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. U.S. stocks climbing with tech companies like Amazon and Google driving the gains. This as the president has renewed criticisms of Amazon, claiming the e-commerce giant is putting financial pressure on the U.S. Postal Service. It could, in fact, be quite the opposite, with Amazon keeping the Postal Service in business. The president is due to speak at the bottom of the hour. We will bring you there live when that happens. He is traveling today in Oshkosh, Wisconsin, talking about the economy and jobs. For now, though, the Postal Service in the spotlight as we inch closer to an election where a significant number of voters will be mailing in their ballots. The Democratic National Convention kicks off tonight virtually. Joining us to talk about how it is all impacting the markets, Bloomberg's Abigail Doolittle, who's been watching the back and forths of the day. No records today, Abigail, but what were the main drivers?
Everybody waiting for that potential record for the S&P 500. That's really what investors have been watching for, Emily, for the last couple of days. Stocks really just climbing this wall of worry, but now the S&P 500 hitting this area of resistance, that last record high. The bulls really falling short of being able to take out those old levels, and lots to worry about, quite frankly. So the S&P 500 up about 0.3%, shy of a record closing high, an all-time high. The Nasdaq, though, once again closing at a record high, up 1.1%, really being helped out by some of those mega cap tech stocks, this year's defense. So as investors worry about whether or not stimulus will come through, election worries, China, so much for investors to worry about. They are going again toward this year's defense of technology. The VIX on the Nasdaq 100, the VXN, down a little bit today, but still relatively elevated. Some options experts saying that they expect it to spike back above 30 and that we could see some sort of a pullback after this huge rally out of the March lows. Now, that rally out of the March lows, Emily, if we go into the Bloomberg terminal and take a look at what's happening here, some are wondering whether it's too far, too fast, because it has taken about 5 months for the S&P 500 to achieve what took 3 years. But the top panel of this chart, valuation on the S&P 500, and it is super stretched, 27 times forward PE, exactly where we were back in the tech bubble, supporting, in fact, perhaps the idea of too far, too fast. Of course, the Fed liquidity in the first round of stimulus really helping out the economy and the financial markets. But now we need that new stimulus. Some talking about double dip recession if we don't get it.
So let's talk about some of the tech outperformers, NVIDIA being one of them ahead of earnings later this week. What is driving that?
That stock really on fire. It's incredible, Emily. Out of the March lows, up more than 150%. Today, up more than 6% ahead of reporting earnings on Wednesday. The street getting very bullish. Lots of price targets out there being raised, including Oppenheimer. Take a look at that over the last 4 days, a 4-day winning streak, up 13.7%. Now, when they report on Wednesday, the big question is truly, is this stock priced for perfection? Or actually, it is priced for perfection. Will they deliver perfection with, again, the stock up more than 100% on the year, up about 170% out of the March lows? Folks were expecting or is estimating $1.97 in earnings, adjusted earnings on nearly $3.7 billion. That reflects 59% bottom line growth year over year, 42% on the top line. And lots of the analysts out there bullish right now. It seems because of the stay-at-home trend. They, of course, 51% of their revenue coming from gaming. But if there's any kind of hiccup, it could certainly send these shares lower. And if we take a look at the performance of NVIDIA relative to the Nasdaq 100 and the stocks over the last 5 months, there's that huge outperformance. In fact, Tom Thornton of Hedge Fund Telemetry joined us for Options Insight today, thinking he thinks it's stretched and we're likely to see the stock drop back down. We'll know more on Wednesday, but today, one of the top stocks, not just for the Nasdaq 100, but the S&P 500 as well, although not helping get that record high for the S&P 500, Emily.
All right, Abigail, we'll see if it happens tomorrow. Thank you so much for stopping by. Turning now to the 2020 Democratic National Convention starting tonight. Most of it happening virtually, airing between 9 and 11 p.m. Eastern Time. You can watch it right here on Bloomberg Television. This as House Speaker Nancy Pelosi has just called lawmakers back into session to vote on a proposal that would block the president's plan for overhauling the Postal Service, some seeing his efforts as a threat to the election, which will likely mean more mail-in ballots as the pandemic continues. With more on these two political stories, we've got our White House correspondent, Mario Parker. Mario, talk to us a little bit about the president's latest criticisms of the Postal Service, again, roping Amazon into it. Yep. And of course, the big concern is that this could put a damper on mail-in voting when a lot of voting is going to be happening virtually.
No, you're absolutely right. The president has waged another broadside at Amazon, a familiar and target for him since his presidency, during his presidency, I should say. He's accusing the Postal Service of undercharging Amazon and in part blaming its deliveries of Amazon products for its financial woes, just as Democrats continue to attack him and say that he's trying to undermine the election by essentially gutting the Postal Service.
Now, he said he has opposed additional funding for the Postal Service. There's also this controversy where the Postal Service has been shortening hours, removing some letter boxes. They've now said they won't remove any more boxes until after the election. President Obama is saying that President Trump is trying to kneecap the Postal Service. Talk to us about, what's at stake here, given the proliferation of mail-in voting that is going to be starting in September.
Yeah, no, it sounds like a cliche, but it's absolutely accurate to say that we're in an unprecedented election cycle. There are people that are afraid of going out to vote, given the coronavirus pandemic, the social distancing guidelines, and they would prefer to just mail in their ballots. Now, of course, the president one of his long-standing criticisms has been to say that mail-in ballots, mail-in voting is just ravaged by fraud, even though there's no evidence to support that assertion. But no, there's a lot at stake. Some less than 3 months before the election, as many Americans signaled that they plan to cast their ballots by mail.
Let's talk about the convention starting tonight. President Trump has been trying to counter-program the DNC, and we also have some prominent speakers, including Michelle Obama, who will be on stage. What's the latest?
Right. No, it's been a feature of his campaign throughout this cycle to try to counter-program the Democrats and to make sure that he can try to quell some of the enthusiasm or even coverage around their events. He did that earlier this year with some of the caucuses as well. This week he'll be on the road in some key battleground states. As you mentioned, the DNC convention kicks off tonight. You've got Bernie Sanders speaking, and then you also have, as you mentioned, Michelle Obama speaking, who is still wildly popular among Democrats.
All right, Mario Parker covering the president for us this hour. Thank you so much, Mario, for that update. And do not forget to tune into Bloomberg's coverage of the convention starting at 10 p.m. Eastern Time right here on Bloomberg Television. Coming up, more on the potential threat to mail-in voting. We're going to talk to one expert to get her take on what she sees as the election's nightmare scenario. That is next. This is Bloomberg. During a pandemic-era election in which millions of Americans plan to vote by mail, there are raging concerns about the integrity of the results. I spoke to digital security expert Yael Eisenstadt, a visiting fellow for Cornell Tech's Digital Life Initiative, who's also Facebook's former head of elections integrity for political advertising. I asked what she thought about the threat landscape right now for the 2020 election and how platforms like Facebook can do better.
I want to be really clear. Any recommendations between now and November are sort of these emergency things that the platforms can do. Whereas what I'd really like to see someday, maybe after November, is the larger conversation about the systemic issues that have made these platforms where they are today and have made this rampant disinformation about voting, about things that are so important, so ripe to begin with.
We've got the Democratic conventions happening this week. Senator Kamala Harris now on Biden's ticket. Does that sort of ratchet up the activity or the urgency now that it seems more real?
Yeah, I mean, there's no question, right? We've already seen how some people are using this moment to try to spread crazy disinformation about her. That shouldn't be surprising that that's going to happen. But again, it's up to how are the heads of these platforms going to deal with that. But yeah, it is go time. And people, I think it's really important to remember, people will start voting in September, right? Like we're talking about November 3rd, but since so many people are going to be voting through the mail, I would like us to consider that the election is starting in September. And so we don't have a lot of time to figure out how do we build trust? How do we make this safe? How do we make this secure? And there's so many elements, but it's urgent. It is go time.
You recently released a report on what platforms can do to protect the vote amidst this surge of misinformation on Facebook, on Twitter, et cetera. What should they be doing that they're not doing?
Facebook has just announced, I think a few days ago, this new voting center. Now, it's great. I'm glad they have a new voting center. I am glad that they want to educate their users on what reliable content is. But the problem with that, it is still that it's users' responsibilities to click through to get to this voting information. What we would like to see, and it was a group of academics and real experts on misinformation and platforms, we put together 4 recommendations on top of what Facebook's already doing. One, they have got to clarify whether or not their voter suppression policies and their disinformation about voting policies apply to politicians. Because no matter what, all of these things we're talking about, they're all sort of tinkering around the margins of the real issue, and that's that they are allowing current politicians to lie about mail-in ballots, about voting procedures. So first, they've got to clarify that.
On that note, Yael, before we go any further, I mean, do you think Facebook should be taking down some of the president's posts rather than just sending people to a voter information center that has what they say is more accurate information? I mean, some of these posts from President Trump are now, circulating on the platform, and they're forever perpetuating, like you say, potential untruths.
There's no easy answer to this particular question. However, if Facebook has a policy where they say that we will not allow anybody to lie about or to post disinformation about voting procedures, voting places, voting times, all of those things can be considered voter suppression, then why are they not applying it to the president? Now, the president also has some posts that skate a fine line, right? If he says that mail-in ballots are going to cause a fraudulent election, well, there's plenty of evidence that mail-in ballots do not, but he can sort of word it so it's looking like an opinion for the future, and then Facebook can't really fact check that. But they can do other things. Instead of these labels that they're applying to everybody, which creates a false equivalency, it makes it sound like every post is being treated equal, they could at least make sure it's not amplified, it's not boosted, these posts aren't targeted towards anybody. They could flood the zone with, as soon as one of Trump's posts comes out, the very next thing you see is an accurate piece of information about voting. I mean, there's lots of creative ways. At the end of the day, though, I do not agree with Mark Zuckerberg's decision to say that he won't fact check politicians, but I'm happy to try to make recommendations to, well, so what else can you do since you are doubling down on that policy that the civil rights community, your own employees, advertisers, so many people have said is dangerous.
So what else can they do? I mean, I know you focused on political advertising. Should they be taking political ads at all?
So that one's, I'm not advocating to stop taking political ads because then you actually do hurt smaller parties. I mean, in the future, I'd like us to reconsider the entire political advertising landscape. And I want to really be clear. The US government has failed on this as well, because we do have laws about political advertising that apply to newspapers and to media, that they just have never updated those laws to apply to political advertising online.
Bottom line, do you think that Facebook and Twitter are tilting the odds in favor of President Trump based on the way their policies work right now?
Well, they're different platforms, and I will say, just on the surface, it does look like Twitter is willing to take bigger risks to make the call about protecting our election at possibly a cost to their own relationship with this administration. Yeah. they have the potential to tilt the scales. Like, do I think that either Jack Dorsey or Mark Zuckerberg have sat down and said, I want President Trump to win and therefore I'm going to do this? No. Do I think that Mark Zuckerberg has doubled down so much on his personal ideology of, I won't censor anybody? Again, it's not censorship. A, you're a private platform, and B, not allowing lies to be amplified and boosted is not censorship. But they had the potential to tilt the scales.
So what is the worst case scenario?
November 3rd hits, because let's assume that more Republicans vote in person and more Democrats vote by mail, because that's what the messaging has been from those two sides. So November 3rd hits and we have more Republican votes being tallied. So Trump declares victory. Because if the media starts talking about it, then Trump declares victory all over Facebook, all over Twitter. And then, even worse, a lot of his people start trying to slow down the ballot counting as it comes in. So it's not even about whether or not mail-in ballots are fraudulent or not. They slow it down. They challenge every ballot. They challenge the signatures. They slow it down to the point where come December, when you have to have it all done counting, the counting hasn't ended yet. And then you're in a situation where Trump has told all of his supporters, I won. And then there's this, well, wait a minute, what happens now? And do we go to the state legislators to decide now? And imagine if one side has declared victory and it really looked like a victory on November 3rd before all of these mail-in ballots were counted. It is a nightmare scenario of what that would do to American society. And I honestly am fearful that there will be cries to come out into the street from both sides in that situation. So I hate to sound super alarmist, but this is a real potential nightmare scenario.
Sounds like a nightmare indeed. Yael Eisenstadt there, the former head of election integrity and political advertising at Facebook. All right, coming up, technology caught in the rising tensions between the United States and China. The U.S. putting further restrictions on telecom giant Huawei, and Trump ratcheting up his fight with TikTok's Chinese owner. Those stories are next. This is Bloomberg. The Trump administration is tightening restrictions on Chinese telecom giant Huawei, aimed at cutting the company's access to commercially available chips. This the latest move in an increasingly tense relationship between the world's two biggest economies, also tied up in the tensions, TikTok and its Chinese parent, ByteDance. Joining us now with the latest on both of these stories, Bloomberg's Shelley Banjo. Talk to us about the latest restrictions on Huawei, Shelley. It's a little hard to keep up with all of the twists and turns of this. What do the latest developments actually mean?
Yeah, there are a lot of twists and turns, and it kind of just feels a little repetitive. But what's happening today is that the Commerce Department announced further restrictions on Huawei. And what this is aimed at doing is really trying to close up some loopholes. And so, as you know, Huawei is a huge, sprawling company with a huge, sprawling global supply chain around the world. And so the U.S. has tried to kind of stop Huawei's access to all sorts of things, particularly chips made by American companies. But it's not so cut and dry. And so what this latest action does is to try to curb even more of Huawei's access by closing some of the loopholes that existed beforehand that Huawei used to get around previous restrictions.
So how does this play into the upcoming trade talks and what, some folks on this show have said, it appears the president is trying to start a Cold War?
It certainly feels that every day there is more action being taken against Chinese tech companies. Huawei was and has been one of the biggest targets for the U.S. administration. We reported out of China that Chinese officials wanted to put talks about Huawei, TikTok, WeChat, and a host of other company-specific things on the table for the trade talks. But it so far has not been entered into the trade talks. And, there is still a trade deal, at least in theory, signed between the U.S. and China.
So talk to us then about the latest with TikTok, some developments there over the weekend with the administration basically doubling down on enforcing this idea that ByteDance and TikTok have to sell the U.S. assets of the company?
Sure. So it was a bit of a mad scramble over the weekend to figure out what exactly happened because President Donald Trump on Friday put out another order really geared toward TikTok and basically telling ByteDance, the company, the Chinese company that owns TikTok, that it had 90 days to divest of TikTok in the U.S. What this kind of did was it brought upon some legality to the threats that President Trump had made before. Previously, Donald Trump had said, you have 45 days before we ban TikTok. And what Trump used for that authority was this kind of authority he had under emergency situations. This uses a different authority. This basically uses authority granted to the Committee on Foreign Investment in the U.S., or CFIUS, which reviews different acquisitions of American businesses by overseas investors. And it kind of provides a stronger legal case against what Trump is trying to do with TikTok.
So what are the latest on the negotiations with Microsoft? And are they the only bidder, or have others tried to get into the game?
Yeah, what's fascinating about this is that often deal talks try to be secret, or, at least the companies try not to get reporters to talk about it. What's different about this is that, Microsoft came out very publicly, in a very public blog post saying, yeah, we're interested in buying this and we're kicking the tires on it. Meanwhile, so are other companies. We've reported about Twitter that is also looking into it. Twitter's a much smaller company, smaller than TikTok even, and they would certainly need financing to back them up and to help them finance the deal. And there are other companies that have been talking about or at least interested in looking into it. But the issue for companies like an Amazon or a Google or a Facebook is that they have enough of the antitrust issues to worry about that buying TikTok would certainly raise eyebrows in Washington.
All right, Bloomberg Shelley Banjo, keep us posted on the developments. Thank you so much for that update. Okay, coming up, finding the unicorns of tomorrow. Initialized, Gary Tan will tell us where he is planning to put a new, huge fund and what companies are standing out. That's next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Initialized Capital, a company that backs Instacart, Coinbase, and many other tech startups, has just raised $250 million in their fifth and largest round of funding, all aimed at providing seed money for tech startups. Joining me now is Gary Tan, co-founder and managing partner of Initialized Capital Management. Gary, thank you so much for joining us. So obviously we are in unprecedented times. What was different fundraising this time than it was last time?
Well, in some sense, it was a little bit easier because normally I'd be on a plane for about 4 or 5 weeks back and forth, but instead I'm coming at you just from exactly here. I didn't have to leave my home in San Francisco, which made it a little easier.
So what about the environment? Obviously, we are in a recession. You've got tens of millions of people who have lost their jobs. You've got a lot of small and medium businesses that have been wiped off the map. I mean, how optimistic were and are investors about putting a lot of money into new funds right now?
Well, for us, we're really focused on being the best at the very earliest possible stage. So our sweet spot is actually team idea demo. And as you can tell, just take a look at the NASDAQ and how tech stocks are working right now. Tech is really the most pure form of yield that exists out there, especially when you're talking about teams of 1 or 2 people, engineers, designers, and product people pushing out that first version, which is really our favorite time to fund them.
So what's different about the kinds of companies you're looking to seed now versus 6 months ago?
Well, what we're seeing in our portfolio is things like Ro and TruePill are just helping telemedicine move forward in ways that just didn't really happen before. And now it's sort of existential. The health plans and the providers out there are really struggling with revenue. And telemedicine is a really important pivot for one of the largest industries in one of the largest businesses in the economy.
So given that nobody knows exactly what the future will look like and that we are in this for much longer than we thought we would be, how do you even try to game out what the future does look like and what companies or sectors will be the most disrupted?
Well, I started off my career as a software engineer, and I probably would have worked on software for free. But now what I realize, 20 years into my career, is that software is actually penetrating every part of the economy. And, Uber and Airbnb were really just some of the first, and really the tip of the spear now is actually companies like Instacart that are sort of arming the rebels. You can take a look at the Shopify stock price right now, and you can tell that arming the rebels is actually a very winning thing to be investing in right now and to be working on.
I recently spoke with the CEO of Shopify, Tobias Letka, who said that if Amazon is building an empire, we are arming the rebels. In fact, he used those very words. You founded the firm with Alexis Ohanian, who's the co-founder of Reddit. He is now moving into a board partner role. What does that mean? Is that a setback?
Well, I've been really happy to call Alexis a friend for a very long time. In fact, he sort of put me in the business when he interviewed me to get into Y Combinator way back in 2008. So one of my favorite things about this business, especially venture this early, is it's about helping people actually fulfill their dreams and their destiny in a lot of ways. And so this is the best way for the two of us to honor our friendship to each other. And so I'm really excited about what he's going to fund, and I hope to fund it alongside with him in the future.
Alexis recently left the board of Reddit and asked that they replace him with a black director, which they have done, bringing in the head of YC, Michael Siebel. What are you doing to make sure that you are funding people of color, especially at a time when the urgency is so high and the numbers are still so depressing in terms of the black entrepreneurs who are actually getting funding in this business and getting a chance to start the next unicorn?
That's a great question and a very important one. I mean, for me, I grew up the children of immigrants who came here with nothing. And it's actually incredible the power of tech to bring people up. Tech gave me absolutely everything, and I was put on this earth to actually help more people fulfill that. And so I think that that's a very important thing. For us, we've actually reached 7% of the founders in our last most recent core fund are Black. 9% are Latina or Latino. And, we're one of the few venture capital firms that actually release those numbers. And that number is 3x higher than what it was in previous funds. So I know that we're coming from a place where we weren't doing enough. Our whole industry isn't doing enough. And I don't think that we're even scratching the surface of where we need to be right now. But I think it's a really important thing for all of us to get better at. And that remains a priority for us, because what that means is there are people who should be getting funded that clearly aren't due to sort of the system as it is.
So let's talk about going forward, given that we don't know how long we're going to be in this, new normal. We don't know what normal looks like after we come out of this. When we went into the pandemic, so many VCs were telling us that they were telling their companies to cut deep and cut fast, cut more than you think you need to cut. But now that this is going on longer, are you seeing more death by 1,000 cuts happening? Are you seeing companies to have to revisit their initial plans and say, look, we're going to have to be more conservative than we thought we had to be?
Well, it's two things, really. As a company, if you have a chance to actually come out of it and you can last that long and show a few quarters of growth post-COVID, well, that's actually probably still a winning strategy. But if you can't last, then the flip side is true. Actually, you should do whatever you can to get growth right now, because we can't make it last. And I think that you're seeing across the portfolio and across many different venture portfolios, you're seeing an increase in inside rounds. And that's actually how it should be. When founders have to pick venture capitalists, they should actually ask very directly, hey, how much reserve are you going to hold for me if I don't make it? If I don't make the next round, are you going to support me? And will you have reserves for me? And I think founders right now who are going to make it, they ask those questions, or we're lucky enough to have founders who had those reserves, to have venture capitalists who had those reserves.
All right, Gary Tan, we'll be looking to see what you believe are the next unicorns. Thank you so much for joining us, Gary Tan of Initialized Capital. All right, coming up, autonomous checkout. Is it the future of retail, where you can just walk in and walk out and just pay automatically without having to stop at a cashier, without human cashiers anymore? We're going to hear from the CEO of Standard Cognition, which is powering this technology, next. This is Bloomberg. Circle K is the latest retailer to bet on shoppers' reluctance to stand in line, especially in the middle of a pandemic, with plans to roll out cashierless checkout at some U.S. stores next year. The tech is supplied by the AI startup Standard Cognition, which is hoping to transform the retail experience with autonomous checkout. And with mega retailer Walmart reporting earnings tomorrow, the customer experience very top of mind. I want to bring in co-founder and CEO of Standard Cognition, Jordan Fisher, with us now. So Jordan, there has been some resistance to this technology, not necessarily mass adoption. Customers don't necessarily understand it or trust it. How do you see this going mainstream? What is the path to that?
Yeah, I think there's a couple of components to it. And the first component is really just the core part of the experience, which is we've all come to expect the immediacy and low frictionness that e-commerce and online has enabled. But we still often prefer shopping in the real world. 90% of retail is in physical stores, brick and mortar. We're still opening more stores than closing today. So there's something about the real world that we all prefer as shoppers, but we want to capture some of that amazing friction-free experience of e-commerce, which for us really means let's get rid of the worst part of shopping, which is lines. If you tabulate it up, there's actually a few billion hours spent waiting in line across the world each year. It's kind of crazy. And our thesis is, well, let's have our cake and eat it too. Let's deliver that amazing friction-free experience that e-commerce says that we can have, but let's give it to you in your store that's right next door.
Now, you opened the Standard store in downtown San Francisco, which is a convenience-type store, no turnstiles, no gates. How is it actually working? What are you learning about customer behavior? I know you have been open during the pandemic. What kind of traffic are you seeing?
Yeah, it's a great question. So, even before COVID, we were seeing a lot of excitement among retailers for this technology. COVID really ended up being an additional accelerant to want to adopt some of this touchless technology, which autonomous checkout does. It's safer for shoppers because you don't have to exchange products with the cashier at the end of your trip. You don't have to wait in line, which is one of the worst moments from a virus infection perspective. So it's safer for the shopper, but it's also safer for the clerks working the store. So we were really excited to be able to keep our store open and provide this convenience store service to the local community. We have seen a decrease a little bit in shopper flow, which I think is to be expected. But we're still seeing customers come into the store every day and are just really happy to be able to keep providing that experience.
Now, you're going to be deploying this technology at Circle K's. Curious, how is it different than Amazon Go? What sets your technology apart?
Yeah, great question. So for us, really the whole point of the technology is to reach as many shoppers as possible, and ideally just put this into every store around the world so that you as a shopper, no matter where you go, get to experience this technology and get to skip the line. That's really the whole point. And you don't get that amazing experience if it's only in a few select places. And the major difference between us and Amazon is Amazon's building stores. They're kind of ground up new build-outs is how we refer to it. Whereas what we're doing is taking existing stores, the stores that you already know with the products that you already love, and we're transforming them into stores with autonomous checkout. So the store doesn't change, the products don't change, the shelves don't change. We don't have to do any layout changes, there's no gates, et cetera. It's really just the exact same stores that you know and love with our technology on top of it that lets you skip the line. That's really the major differentiating factor. Is it's built to scale and it's built to meet the retailers where they are with their existing fleets without major renovations.
You've said you've had conversations with hundreds of retailers, potential retailers. How much are they bringing up concerns about Amazon, fears of competition with Amazon?
Yeah, it's a great question. So they won't always necessarily tell us exactly what they're most afraid of. Sometimes you got to read the tea leaves when you're bringing a product to market. But it is clear that it's something that's fairly top of mind. And that there's been the war between e-commerce and physical retail. That's been going on for quite some time now. But really, I think the thing that's top of mind now is Amazon is coming to the physical world. And Amazon only does that when they think they have a competitive advantage. They only enter a new market when they have something interesting to bear. And I think a big part of that advantage they think they have now is autonomous checkout. It is the Amazon Go and the Just Walk Out technology that they're developing. Now, of course, they have a lot of other impressive assets to bear as well, like their last mile delivery with their acquisitions of Whole Foods, for example. But I think you tie all this together, and suddenly it's a very credible threat that Amazon's going to be able to make real inroads to the world of physical retail. And I think one of the reasons why we've seen such a strong desire and so much inbound interest in our technology is you really have to adopt something like this if you're going to stay relevant over the next several years. You have to be able to give that best-in-class experience to your shoppers so that you can stay toe for toe with Amazon.
So I know that concerns have been raised about privacy issues. You've said you're not holding on to certain kinds of data, but yet when you look at the video, it does look a little Big Brother. What can you do to address concerns about, what do you know about me if I want to go into a store anonymously and buy something? It's a little, disconcerting to know that you have all of this information about me.
Yeah, absolutely. And one thing that we're passionate about is bringing computer vision to the world and as responsible and safe way as possible. And the goal really is to install this into stores everywhere. And because of that, I think there's an even greater level of responsibility to do this in a very principled way. So the way that we approach this is from the very sort of inception of how the system works, it stays anonymous. So we don't do anything that's involving biometrics. We explicitly don't do facial recognition. So it's not that we have facial recognition, but we try to do it in a very secure way so that information can't leak or be hacked, for example. We just never do facial recognition. It's kind of a bright red line that we say we will never cross. And we really encourage other companies, especially companies in the computer vision space, to adopt a similar stance. So the system as a whole, from a computer vision perspective, from that camera perspective, is completely anonymous. It's never able to identify you or re-identify you. It's just following you through your shopping trip as an anonymous guest. And it's really only at the very end where we say, okay, now we need to transact, that we'll tie it to your app, which is in your hand or in your pocket, and we'll connect to your payment information to be able to charge. But we try very hard to keep those two systems completely separate.
All right, well, we'll be watching to see how the technology continues to roll out. Jordan Fisher, the co-founder and CEO of Standard Cognition, thank you so much for joining us. All right, coming up, a company first founded to bring more women to boards is now opening up to all people of color, including men. We'll speak to the boardless founder, Sukhinder Singh Cassidy, next. This is Bloomberg. Welcome back to Bloomberg Technology. Well, if women have it hard in corporate America, Black women have it even harder. In a new report from Sheryl Sandberg's Lean In that shows Black women are much less likely to be promoted and have interaction with managers than their counterparts. I spoke recently with Sandberg about the report and the addition of Senator Kamala Harris to the Democratic ticket. She told me, "We never dreamed we would be putting this out just days after a Black woman was nominated for vice president, but it is a good moment, and I'm excited that she is there to set that example." I caught up with Sukhinder Singh Cassidy, founder and chair of the board list, recently about the need for better representation and their decision to open up their ranks to men of color. Take a listen.
When we started the board list 5 years ago, gender was its own white space in terms of diversity. And while we are not done on that topic at all, today when we look at the diversity stats by race, they're actually even more abysmal. 9% of people of either gender are African American on Fortune 500 boards. Latinos and Latinas is 4%. Asian representation on boards is 4%. White women and white men make up the majority still of what's on boards. And so it was time for us, when we looked at our mission, to really understand that the gap and the lag in race and minorities is as big as it was on gender, and it's time to open up that funnel as well.
The Black Lives Matter movement has created a new urgency behind this. How is that impacting companies' recruiting strategies, what they're asking you for?
It's a great question. So first and foremost, we surveyed our own directors on what the impact of Black Lives Matter has been. And we found three things. First, and most obvious, you know this, is over 60% were board members to companies that put out a Black Lives Matter statement of any kind. Another 55% said that in their own companies, they changed their diversity policies internally as a result of Black Lives Matter. And then we surveyed those same directors on what they think Black Lives Matter has done for corporate boardrooms. 75% said they believe that actually racial inclusion in the boardroom should be mandated. So I think what Black Lives Matter has done, it has moved sort of this into the mainstream consciousness of business at every level with regard to customers, employees, leadership. This is now the topic.
We're seeing a number of companies set targets. Do you think there should be quotas? Do you think there should be mandates about representation?
You know that for a long time I believed that maybe the Rooney Rule was enough, i.e. just having a pipeline, where what you interviewed was a diverse slate. I think California and other actually countries outside the United States have shown that there is more progress when you actually do insert a quota or mandate. So over the years, I've certainly become more a fan that if you can't get there voluntarily and need a push, that a quota may be the way to go.
Former Vice President Joe Biden has chosen Senator Kamala Harris as his running mate. Talk to us about what the significance of this is, especially given her ties to California and Silicon Valley, and how much you think this can actually move the needle on some of these issues that we're talking about.
Yeah, I think you're hitting on two things about Kamala that are interesting. Number one is her own diversity, race, gender, and what that means, and sort of just being representative of the population that she and we are trying to serve here in the United States. And so I think Kamala's attunement to those issues, I hope, issues like parental leave, family leave, right? Issues that really help us take advantage of all levels of the workforce with proactive policies. I hope there'll be movement there. Clearly, on issues related to tech, Kamala has been out in front, and I think you're aware of this. She has shown, I think, over the years, a pretty tough stance on tech, but also a pretty balanced one. And I think for the folks in the tech industry, at least our belief is that she is well educated on the issues. And I think that tough but fair is something I think that we could all, live with and hopefully find our own voice in.
I just spoke with Facebook COO Sheryl Sandberg about this topic as well. And one of the things she's concerned about is that in the middle of a pandemic, it's going to be even harder, despite some of these great examples like Kamala Harris. It's going to be even harder for Black women to advance because so much of advancement is dependent on informal and casual time in the workplace with your managers that Black women, according to a new Lean In report, just aren't getting. How concerned are you about that the pandemic could actually set us back on some of these issues?
It's interesting. My own view is maybe slightly more to the middle, in the sense that when we're all on Zoom, we're all on Zoom. So I think, Emily, in a scenario where some people are having one-on-ones and others are not, one could argue that this would set us back further. But I think almost the entirety of our culture has moved to Zoom. So ironically, in some ways, Zoom provides a level playing field for communication, versus the person who's in the office right beside you, who you cross paths with every day. So maybe Zoom in some way should be seen as an equalizer, at least for conversation. Yes, I think the issues are pretty serious, though, and they remain. And it's going to take far more than you and I, being equally able to chat on Zoom as two other people to solve some of the more systemic issues.
Sukhinder Singh Cassidy there, founder of The Board List. And that does it for this edition of Bloomberg Technology. Bloomberg Daybreak Australia is next. And do not forget to tune in to Bloomberg TV's live coverage of the Democratic National Convention tonight, 10 p.m. Eastern Time. My colleague David Weston will be there. Do not miss it. This is Bloomberg.